Hey everyone, it's Nance here with Drill Down Solution. Let's talk really quick about cryptocurrency and the tax implications. So first of all, from an investment standpoint, should you invest in crypto? Well, the answer is it depends. Just like anything else, there's pros and cons. Crypto in any way, shape, or form is not a safe investment. There's many times when crypto soars and does really well, and that's often followed by a fall. Dogecoin was actually started as a joke. Now, the only intrinsic value of crypto is as a means of exchange. That's what it is, right? So theoretically, it would only be more valuable than a dollar if that relevant cryptocurrency is accepted more broadly than a dollar, which it is not. So under that theory, you could make an argument that Bitcoin and Ethereum are clearly overvalued. Now, I understand there's more that goes into that, especially when you consider supply and the fact that dollars are being printed virtually with no backup and are in a state of devaluation with this current inflationary environment that we're in. Now, since crypto does come with risk, there is a possibility of a high rate of return. Bitcoin has consistently held the lead for market price. In July of 2016, Bitcoin was going for about 650 bucks. So that tells you how much overall increase in the market value we're seeing in this kind of stuff. So what does that mean for taxes? Well, first of all, the IRS has added a question to the front page of Form 1040, yes or no, that says, at any time during 2020, did you receive, sell, send, exchange, or otherwise acquire financial interest in any virtual currency? Basically, if you did anything with cryptocurrency or virtual currency, as they call it, we want to know about it. You need to report it. So, for example, if I buy a unit of Bitcoin for $47,000, and a week later that's worth $50,000, and I use that unit of Bitcoin to buy something, a car or something that cost me $50,000. I've got a $3,000 gain I need to report and pay taxes on. If instead of using it to buy a car, I use it to buy up units of Dogecoin that add up to $50,000, I've still got a taxable gain of $3,000. So it's a gain or loss if you sell crypto, use it to buy something, or if you exchange it for another cryptocurrency. Now, in the infrastructure bill that's been passed by the Senate and will be debated in the House, one of the provisions to pay for this infrastructure bill are more stricter requirements for reporting crypto transactions. And we won't get into the details here because we don't know what the final law is going to look like, but be aware that there's likely going to be some more strict reporting requirements coming down the line if you have had some crypto transactions in the past that you haven't reported. Probably a good idea to start reporting those, and if you need to, go back and file amended returns so that the IRS doesn't make you change it and catch it for you and charge you penalties. If you have any questions, feel free to post them below or feel free to reach out directly to me. Again, Nance, Drill Down Solution, thanks very much and have a great week.